company in focus is EMS Limited, and we are joined by Mr. Ashish Tomar, who is MD at EMS. Mr. Tomar, welcome to NDTV Profit.
Yeah, good morning, welcome. Thank you for having me.
Yeah, Mr. Tomar, we've not spoken since the Q1 has gone by. So firstly, I'll start with, as to how the Q1 performance has been for you, because, you've seen significant growth in terms of your revenue as well as your bottom line. So how has the quarter gone by? Plus, have you seen more pickup in terms of order visibility post-elections?
Yes, certainly. There was sort of a slowdown during the elections, but after the election, there is the tendering that are floated by the government has already picked up.
All right, Mr. Tomar, now you've reported a strong growth, about a 50% of a revenue growth that we are looking at. What is the guidance for overall FY25? Where do our revenue growth come at, and about the margins also, what are our margins going to look at the end of FY25?
Yeah, I think for FY25, our revenue is going to be in the range of somewhat about 30 to 35% growth over the previous year. And the overall margins percentage-wise would remain in the same range as in the previous year.
Right. So with that kind of growth, Mr. Tomar, Harsh also joining in, with that kind of growth, what gives you the comfort in terms of margins? Because your margins are quite steady in that sense.
Yes, we are hopeful of maintaining those margins. We pick and choose our projects quite judiciously. So I think that's what translates into these margins.
Sure, but as you diversify, Mr. Tomar, do you believe that margins will contract or no?
No, the only basis of us selecting a project is the margins. At the time of bidding for the projects, we bid keeping our margins in mind, and if we get the project well and good, if not, then we try next time.
Understood. And what kind of diversification are you going through? Because I understand that EMS is now going into infrastructure. Earlier, you were only in water and water-related associated kind of infra development projects, but now you're diversifying more. So talk to us about some of those diversifications that you're making.
Yeah, right now about 70% of our business is from the water sector. And the majority of the scope of work that we do involves excavation, laying of pipelines, and reconstruction of the road that we dig up. So we already have specialization in construction of roads. So we are looking forward to expanding into the road sector also.
Okay.
It is new for us.
Right. Okay. So then, Mr. Tomar, then I want to understand that since you're diversifying, what will be your blended margins be at, let's say from a longer term perspective, if not FY25, by the end of FY26?
Well, we are currently bidding the road projects also, keeping the margin somewhere in the range of 25% EBITDA. And let's see, we are quite hopeful that we will at least get a project this year.
So are you saying that the road projects that you're bidding for, are they at the similar 20 to 25% of margins level? And also in the road EPC in which you're bidding towards, what's the bidding outlook like? Have we converted any of these bids into orders? What's the transition towards this?
No, we have not yet converted any bids into the projects, but we are bidding, keeping our margins at least at the costing stage at the 25% range. And we are only targeting large-scale HAM projects. So I think we hope that in those projects we would be able to secure projects with the similar margins.
Got it. Sir, just trying to understand, because most infra players within this space have just about a double-digit margin. you're expecting a 25% margin, or rather you're expecting to maintain that on these extremely large projects. How do you expect to do that?
Yeah. So this business also involves a lot of engineering in the pre-tendering stage also. If we choose our projects wisely, keeping the costing minimal and ensuring that the post-bid engineering, if we get the project and we are able to design the project such that we are able to minimize the cost, I think that would help us keep the margins that we have been delivering from the last 10 years.
And Mr. Tomar, since you're planning for this diversification to the road side of the business, are you looking for any fundraising to capture those bigger ticket size of orders?
Not right now.
All right. And again, even if in the real estate also you're making some developments over here, you're making joint developments, can you explain that part of the business as well?
No, we are not entered real estate as such. We are only looking for projects as EPC contractor for the real estate projects that are being developed by the government.
Okay, so Mr. Tomar, I want to understand that there is so much demand in terms of the business that you're already in, the water business, there's Jal Jeevan Mission, there's Nariman Ganga, but so I want to understand that what is the reason behind this kind of diversification that you're making? What is the ultimate goal, behind this diversification process? Because there is a lot of demand still that you're yet to capture.
Yeah, ma'am, the nature of the business is such that there cannot be much growth revenue-wise in this sector. The projects are slow, and the sizes of the projects are in the range of around 300 to 500 odd crore. There are no projects bigger than that, say 1 or 2 odd projects in a year. So keeping that in mind, we are trying to bid in the other infrastructure sectors. And if we are able to secure projects with our margins intact, I think that would be well and good.
Very, very fair. But I want to try and understand what the bid pipeline is like. So your current order book for our viewer context is around 1800 crore. You're expecting around 1000 crore in terms of revenue from FY25 alone. So your book to bill is roughly less than 2 times. Just talk to us about what's the bid pipeline like for maybe the next 8 to 9 months for the rest of the financial year, and talk to us about the success ratio for some of these bids. How much of them will be water related and how much will be other infra?
Success ratio, our average is somewhere around 10 to 15%. That changes from year to year.
Understood. And how much of this 4000 crore is water and how much of it is other infra?
Yeah, I think almost 2/3 of it is in water sector.
Understood. Got it. Okay. And with regard to other infra, currently, what do you believe is the reason why you've not been able to capture new orders within this space?
I think one of the factors would be that margins that we require for our projects. I think that is a hindrance. But keeping in view the quantum of the projects that are coming up, I think we would be able to secure projects in other areas also.
I appreciate the candidness.
Yeah.
Thank you.
Right. So, Mr. Tomar, I also want to understand that you've recently acquired a manufacturing entity in Fatehpur, UP, and you're focusing, using that property as a collateral for banking facilities. So, I want, you to give us some more details as to what you're doing exactly with this acquisition.
Yeah, that acquisition is solely for the purpose of keeping that property as collateral in the bank. And we were able to secure that property from NCLT at discounted rate. So that's why we took that call.
All right, Mr. Tomar, coming back to the business side, you mentioned that you have a higher margin profile as compared to your peers. I want to understand what is the competition scenario in the water side of business, and now that you're entering into the road side of EPC business, what is the kind of competition that you'll be facing over that side?
Yeah. So the competition scenarios, if I were to list out the number of competitors that we see normally in a project, that would range somewhere from 4 to 5 competitors in a project.
Right. So, sir, I want to try and understand capital allocation, right? 1,000 crores in terms of top line, around 25% margin is what you're expected to make in FY25. So, roughly 250 crore in terms of EBITDA. If I remove your interest cost, which is less than 10 crore, honestly, very, very minor, and depreciation, and I knock that off against other income, you will largely generate a free cash flow of around 250 crore less taxes. And therefore, roughly, if I can do the math, around 200 odd crore of free cash flow is what you will generate. What are you going to utilize this for?
Working capital.
Understood. And, yeah, please go ahead.
Yeah, because in our line of business, in the water sector, the working capital cycle is typically around 3 months.
Understood.
So considering our growth in mine, I think we would require this cash flow to be used in the working capital.
Yeah, so no fundraise on the anvil, and you believe debt is well in control, or are you going to raise more debt?
No, no plans to raise any debt. The only debt we currently have on our book is around 50 crores.
Yes.
That too for our hand project that we did.
Yes. Very small amount of debt. I'd like to highlight that as well. But thank you so much, Mr. Tomar. It's been good having you, good conversation. Thank you for being so candid.
Thank you.
Right, that was the management of EMS Limited. Of course, comprehensive chat with regard to Q1 numbers, but also visibility going forward. Lots in terms of diversification to look for. They are willing to hold on to margins though. With that, completely out of time on this edition of the Smith Show. From myself, Mahima, as well as Anushi, thanks so much for watching, as well as the whole team that puts this show together. Stay tuned to NDTV Profit. More action on the other side.